Hello, everyone. This is Jordan. Welcome back to the Daily Gold YouTube channel. Thank you so much for tuning in on this afternoon or early evening of Friday, September 26, 2025. And if you're new here, welcome. Each and every Friday afternoon and evening, I do a weekly recap of the precious metals market and a look ahead to the next few weeks in the sector. And guys, it's becoming a familiar story. Just another great week for precious metals. We could be in a mini blow off in the sector that could lead to an intermediate term peak. But hey, I thought that was possible 3 or 4 weeks ago, and look where we are. So I think it can continue for a few more weeks. Epic week for silver, up 7%. The rest of the sector, silver stocks, gold miners, gold, all up good amounts on the week. Silver closing above 46 in the spot market and in the futures market in the 46.30s. The key for silver was silver has been able to take out that resistance at 42 to 44, and that means it's going to retest 50 in the top of that massive 45-year-long base, and that's setting up for the second greatest breakout in capital markets history. What a week. But as I like to say, enough of me babbling, let's get to the charts. Okay, so as usual, we start off here with our market overview. These are longer-term charts here. Within stock charts, I should have cut this down, but I like backing up and looking at as much history as I can. Gold here, we can see it's kind of consolidating a little bit, closed here at 37.54. Now remember, the measured upside targets from this breakout right here, 37.50, 3,900, and 39.50. So gold has already hit the first target. Silver, there's your 46 close. This thing took out this resistance here going back to 2011. And this baby is going to run up and test 50 sooner rather than later, it looks like. Gold against the stock market, well, it's popped a little bit higher, but nothing too strong there. Again, the miners, it's just been straight up in the last month. Just a great move in the sector. And oil here, as I edit this picture, which is a little bit too big, this is something to keep an eye on for miners. People, it's always important to look at what's the bull and bear case. And look, even though the bear case is not that strong right now, it's pretty weak. That could start, with respect to the miners and precious metals, that could start to increase if we see oil move like that. Now, I don't think it's imminent. I don't think it's even going to happen the next few months. But if we see energy, commodities, and energy prices start to gain some traction, that eventually will cut into these record margins for gold miners. But even if energy costs go up 20 or 30% here, miners are still going to be killing it with their margins. But it's important to keep the bear case in mind. So enough of the big picture. Let's drill down. We're going to focus a lot on silver. So first here, we have the daily candle charts. Gold here up top, silver here at the bottom. And here's the gold-silver ratio. And as we know, and as I pointed out last week, this thing has broken down. It broke down here. Then it tried to test the 200-day moving average a few times here and then here, and it failed here. And so now this thing is just going to roll down like that. I'll get to that more in another slide. But so looking at gold here, a little bit of resistance here, 37.50. That's the target from this breakout, as well as 3,900 and 39.50. So keep those targets in mind. Now, with respect to silver, we can see here it's held above here where there's a gap right around 40. Retested it down here. Now it's moving up pretty swiftly. And so whether this tops at 50 or 55 or even 60, this is a level that really interests me. Like, let's just assume silver tops at 50 and it's going to correct and consolidate. I bet it's going to come back and test this level because of this gap. Or maybe it comes back down here to 41 or 42. So again, always got to keep the bear case in mind because silver, even though it could be starting a blow-off here, a blow-off means there's going to be lower prices after the blow-off. Now, silver, the quarter is closing next week. Really, I mean, what do we have? 2 more trading days? So this is quarterly candle here is going to take out all these resistance levels. This here was the all-time high quarterly close. I think if I'm remembering right, 37.60. And this right here is 39.90, the open level this quarter of this candle right here. So 39.90, that aligns pretty closely with the gap in the last chart. The quarterly candle is just crushing that level. And by the way, when gold broke out on the quarterly chart, and this was the end of December 2023. It did not break out on the daily and weekly charts until March, so until 2.5 months later. So even if this quarter closes below 50, it's still telling us that gold, or silver rather, is eventually soon enough going to break 50 and carry on. So very strong quarterly chart. Okay, now a couple here talking about the gold-silver ratio and looking at interim peaks or blow-offs, intermediate term peaks, etc. So here we have the gold-silver ratio. This is silver down here. This is gold divided by silver. So this is a gold-silver ratio. This is the rate of change. So this is the 50-day rate of change for the gold-silver ratio and the 20-day rate of change for the gold-silver ratio. These vertical lines, they mark peaks in silver and troughs in the gold-silver ratio. And so leading into some of these peaks in the sector, you get a blow-off in silver or a mini blow-off. So this is a blow-off top here, 2011. This peak here was not really a blow-off. It was different because we're coming out of a major hole here, similar to what happened in 2008. And so given that this could test 50 and peak around here and make an intermediate term peak, I'm focused on past intermediate term peaks. So 2004, 2006, those are two examples. And we can see here what happened to the gold-silver ratio. Came down like that, came down like that. Now, this has come down a little bit, or this has come down some, but I think we need to see another leg down like that. And so this is a strong support area, 73.75. So 81 is where the ratio closed. And so this could come down and you could see a bottom at 73 or 75. So you could plug in that ratio, multiply it by 50 silver. That could get you to what I think 37.50 gold. Remember, a ratio of 80 would get you 50 and 4,000. But if you look at the 20-day and 50-day rate of changes for the gold-silver ratio, this is where we are here and now. So in these levels, I mean, this is 2004 right here. We can see. And so there's still room where this could come down like that. So that's one reason why I think you could see a peak, not necessarily at 50, but maybe in the lower mid 50s. And so this is a similar chart, but we're looking at gold stocks here. Here's silver. Here's the gold-silver ratio. And so we can see here 81. And so this is right about 75, the support right here. Now, this is the 50-day rate of change for silver. This is the 100-day rate of change for silver. So again, you get these peaks in silver. They coincide with peaks in the sector. So that's a sign of peaks in the sector. You have silver outperforming and blowing off or doing a mini blow-off at the end. And so we can see here the rate of change. Here's 2004, 2006, 100 days. That's where those levels are. This is 2010. That's 2011. The COVID recovery went way above that. But look at where we are here and now. There's still more room to move up till we get to these levels. So this is 100 days. This is 50 days. So there's still a lot of room. Look at these peaks here. Here's 2006, 2008, 2011. Of course, COVID, that went above it. But again, there's still more room that this can move up. So in layman's terms, that tells us that this, which is already at 46, the silver price, that could easily go to 50, maybe even 55. So it doesn't change my investment strategy in any way, but it's important to know that there's a reasonable chance that this mini blow-off could go above 50. Okay, and finally, with respect to silver, this is our analog chart, one of our favorites, one of your favorites. So this is the performance in silver after gold breaks to a new all-time high. And I put all these examples at the setting of the current move, which began at the end of February 2024. That's when the breakout for gold from its 13-year cup and handle pattern began and took hold. And so everything is aligned with that point. And so black is where we are here and now. And by the way, I put the 1978 to 80 move back on the chart. So you can see here, this is how high it went. I believe this is like $210. So it's more difficult to see these other things here, but you can look here. This is the average of 72 in 2009, excluding the late 70s one. This is the average of all three. And of course, yeah, that's 1978 to 1980. And so here are these numbers. 49 is where the 1972 peaked before it did this beautiful cup and handle. You can see this here. Look, that's a beautiful cup and handle. Then it exploded. It hit almost $100 in March of 2026. So that's what, like 6 months from where we are here and now? So that would be a hell of a move. And you can see here all these various averages. They came to 62, and that's at the end of January. So silver is on really good footing. I would really love to see it make that kind of a consolidation. That would just be super bullish. And this, by the way, I think is at 42, the low. So 1972. And if you look at the present in black in 1972 here, this line, they have followed somewhat closely. I would like to say all of those of you who've joined the Daily Gold Premium, thank you so much. I appreciate you and your business. It is because of you that I get to do the work that I love to do. If you own juniors and minors and you're not a subscriber to the Daily Gold Premium, I think the service could really benefit you. We'd love to have you come aboard. Just go on over to thedailygold.com/premium. It's highly affordable. And what we're looking to do is find a combination of those juniors that have 5x potential over the next few years, but also the highest quality. So what we're looking to do is find companies with the best assets, the highest quality assets, but also have 5x potential at the same time. And we're looking for value. We're looking for companies that can do really well at present metals prices. Look, every silver company is going to do well at $70 silver, and every gold company will do well at $5,000 gold. But we protect the downside by buying good companies and buying things that are really good values at present metals prices. That protects your downside, but allows you to cash in on the upside that we're all going to see in the next few years. And stock picking is important because all of these companies, they may look really great on paper, but they're not all going to work out. There is risk in the sector. So that's why we like to focus on quality with our companies. But at the same time, we're looking for big gains. We're not just looking for doubles and triples. We're looking for 5-baggers and even 10-baggers. So we'd love to have you join us. And thank you so much for listening to my pitch. And let's wrap things up and talk about the stocks. And so here we have GDX, the new highs in the gold stocks. And again, the 20-day moving average of the new highs in GDX, this is all the way up at 42%. It's at this line right here. Now, this line marks some of the peaks like 2016. It's close here in 2002, pretty close in 2006. So this is how far above we are right now from the other various peaks in the sector. And again, this is a long-term chart. You look at this. This is a rhino horn. This is going like this. This is a rhino horn, people. We need to be careful. This is going to peak pretty soon, and then we're going to see a consolidation, maybe a sideways consolidation like that for 6 or 9 months. But it's important to note, despite the sector being so overbought, has it continued to do really well? And why have share prices continued to move higher? Why has buying continued to come in despite being so record overbought? Well, this chart helps answer that question. So this is GDX against the 60/40 portfolio. This is GDXJ against the 60/40 portfolio. I've showed you in past weeks, GDX, the XAU, other gold indices, they have broken out from an 11-year-long base. Actually, this is a 12-year-long base now. So they have broken out from a 12-year-long base against the 60/40 portfolio. So this chart tells you that capital is moving from the conventional portfolio, 60% stocks, 40% bonds, into gold stocks. And breaking out of this big base tells you that the odds of this thing going like that are really increasing. This is not unlikely, but we could be at an intermediate term peak, so we could see this come back and consolidate for a little bit before it makes another move like that. Here's GDXJ against the 60/40. Look where this is. This is larger juniors against the 60/40. This is now up to the 12-year-long base. It's got all the way up here. So these types of charts, this is intermarket analysis. When you're comparing markets against each other, this is so important because you can glean important information. You can understand where the capital is moving. And right now it's moving from conventional into the gold stocks. And that's why this move has continued. Okay, finally, let's talk about silver stocks. So SIL closed at 70. This beautiful breakout right here. The measured upside target, I've gone back and forth on this, but it comes to about 75. So we're at 70. This is getting pretty close. This went through the resistance at 65. There also is some resistance at 75. There's all-time highs here. So this could move up a little bit more before it hits that peak. SILJ, the silver juniors, closed at 22.5. The measured upside target from its breakout, actually, you're looking at about 27, maybe even 28. So we'll see. This is not too much of an ask for SIL to get to 75, given the way that the miners are moving right now. 22 to 27, yeah, that's still possible. But again, if we see these ETFs just continue to surge in the next week and we get really close to those targets, that is going to lead to that intermediate term peak. Well, that's it for this week. Hope you had a great week. Hope you really enjoyed this video. Would love to hear a comment from you. Let me know what you think. And hope you guys all have a great weekend. I'll talk to you guys again next week. Thank you so much.